Today, Sol climbs as BlackRock expands its $1.7 billion tokenized money market fund to the Solana network. The Trump family crypto project, World Liberty Financial, gets in on the stablecoin wars with a new dollar-pegged token. And Uranium Digital's founder breaks down how the company is using blockchain and tokens to modernize the trade of fuel for nuclear power. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Major cryptocurrencies are mixed this afternoon, with Bitcoin dropping a little more than 0.5% to just under $88,000 as of noon Eastern. Ether fell 1% but still traded above the $2,000 mark. Sol, however, is rising by nearly 1.5% after BlackRock, the world's largest asset manager, expanded its $1.7 billion tokenized money market fund to Solana. Now, in a post on X this morning, Solana announced that Securitize, a company that specializes in tokenized securities, launched BlackRock's BUIDL fund on the network after debuting on Ethereum last year. Okay, let's talk about the top stories. The Trump family's World Liberty Financial crypto project is jumping into the crowded stablecoin market with a new dollar-pegged token. The decentralized finance venture said today that the stablecoin, dubbed USD1, will be pegged to the US dollar and backed by short-term US government treasuries, dollar deposits, and other cash equivalents. It's expected to go live soon on the Ethereum and Binance Smart Chain networks. Now, meantime, shares of Trump Media surging this morning, hours after the president's social media company announced an agreement with Crypto.com to launch ETFs and related products. In a news release yesterday, Trump Media said that the ETFs and exchange-traded products will have a Made in America focus and will launch later this year, subject to regulatory approval. It's President Trump's latest move related to crypto and further blurs this line between the president's business ventures and his policy agenda, which some lawmakers, including Senator Elizabeth Warren, have flagged as potential conflicts of interest. Now, last week, 5 Democratic lawmakers, including Warren, sent this letter to White House Chief of Staff Susie Wiles, raising concerns over President Trump's involvement in crypto. According to the release, much of the work in bringing the new ETFs to market will fall to Crypto.com and its U.S. affiliate Forest Capital. Trump Media shares were up 8% as of noon Eastern. However, as of midday, the stock was down more than 33% for the year. Next, Israel-based trading platform eToro filed to go public on the NASDAQ after seeing a surge in revenue, including in crypto. eToro's filing to the SEC reported $12.1 billion in crypto revenue for 2024, compared to $3.4 billion from the year before. Its overall revenue over that same period more than tripled to $12.6 billion. Now, this is similar to boosts seen by other trading platforms offering crypto like Coinbase and Robinhood. Both companies posted better than expected fourth quarter earnings, largely driven by post-election crypto trading on their platforms. CNBC previously reported that eToro, which offers investors both TradFi and crypto investments, had its eye on the public markets after a previously scrapped SPAC deal. Last, back to BlackRock, which also launched its first Bitcoin exchange-traded product in Europe today. The move is an effort to fill growing demand for investment exposure to Bitcoin while tapping into new markets after attracting billions of dollars with similar products here in the US. In January of last year, BlackRock became one of the first institutional investors to offer ETFs in the US to track the spot price of Bitcoin after getting the green light from the SEC. 6 months later, the asset manager launched a spot Ether ETF. The new iShares Bitcoin ETP is domiciled in Switzerland and listed on several exchanges, including one in Paris, Amsterdam, and Frankfurt. All right, for our main story, let's talk about energy, specifically nuclear energy. Uranium Digital announcing a $6 million funding round led by Framework Ventures with the goal of modernizing the trade of fuel for nuclear power with the help of blockchain and tokens. Crypto World's Tanea McKeel spoke with Alex Dolesky, the founder of Uranium Digital, about the funding round and why they're turning to blockchain technology to get the job done.
Alex, thanks so much for joining me on Crypto World today. Your company, Uranium Digital, just raised a more than $6 million seed round led by Framework Ventures. Tell me a little bit about it.
Appreciate it. Good to be here, Tanaya. We've had support from Framework since our pre-seed round as well. Effectively, the cause of this round was exceptional demand in the existing institutional commodities and uranium trading space. So in effect, what we're doing is accelerating our go-to-market as well as development of the derivatives platform outside of just the spot market.
And so let's take it from the very beginning. The uranium market is not something that we talk about a lot in crypto world. So what is the problem that Uranium Digital is trying to solve?
So uranium trades in a very antiquated market structure relative to the financialization you see for most major commodities today. What that really means is being able to trade a spot market, seeing order book depth, having a futures derivatives market that's exists. So effectively, uranium still trades as oil did in the 70s before the first NYMEX contract traded in 1983, nat gas in the 90s, and even coal, for example, was first financialized formally in kind of the early mid 2000s, which is funny because coal is almost a prehistoric energy resource. So, in that respect, the inception of this project was frankly our frustration with not being able to trade uranium as though we were for other commodities. What we're really trying to do is solve for that and create a platform where the majority of the crypto experience is actually abstracted away for primarily traditional participants. So what that means is, as a trader using CME, LME, Shanghai futures, trading commodities, I would never really think too much about what the tech stack is in the background making it happen. And that's exactly the form and philosophy behind taking this to market.
Tell me about the timing of this. I mean, how long in the making is this? And what kind of trajectory are you working on? Tell me what the timing of the raise as well, and how that fits into your plans, and honestly, how that fits into the demand in the market today.
Definitely. So the team's been working quietly on this for about a year and a half, 2 years almost. The thinking here is that end of Q2, early Q3, we'll be going live with the spot platform. After that point, we'll be going live with the derivative suite. It's kind of an interesting time in the uranium market because obviously you have a lot of geopolitical tensions with the Russia-Ukraine situation. And Kazakhstan is actually about 45% of global production. That market's primarily controlled by the Chinese and Russians. And just last week, the Kazakh government actually put up legislation that gives 90% interest of joint ventures for uranium mining and subsurface operations on renewal to Kazatomprom, Russia's largest uranium trading firm and uranium mining firm. What that reflects is, I think, a big focus on securing supply over the next several decades. Currently, Cameco came out a few weeks ago with numbers supported by the World Nuclear Association that current capacity demand from existing utilities leaves about uncovered 2.5 billion pounds by 2040. What that means in dollar terms is about $160 billion of uncovered demand from existing capacity. So if one factors in the emergence of SMRs, nuclear restarts, and obviously the development of additional reactors, you can get numbers up to 4 billion pounds of uncovered demand. So a current spot of about $65 a pound, what that gives you is about 160 billion again, and about 250 to 270 billion dollars of uncovered demand by 2040. So I think as it relates to overall markets, we're at a very interesting point in time for uranium such that it lends itself very ripe for overall financialization. So us and our backers believe that uranium likely will become the next commodity to have a fully financialized infrastructure behind it. And that's what we're building.
Just from listening to you talk these last few minutes, it sounds like the crypto aspect of this is very much behind the scenes, which I think is something a lot of the market is looking for. One of those real world, quote, real world use cases. Can you spell out, it is a crypto show, so can you spell out for our audience exactly how you're using the blockchain technology?
Yeah, so the crypto angle really relates to speed and execution of settlements of trades, as well as broader liquidity for market depth, etc. I think for us, a main thing, and a lot of the team has been in the space since about 2014, crypto native. So the reality is a lot of attempts have been made to bring commodities and traditional assets on chain. My opinion is that, frankly, crypto native retail commodities and some of these assets don't offer you the volatility or upside you want as a crypto native participant. such that you either build products with existing demand from institutions who trade volume, trade size, and become your most important clients, while at the same time creating from the maturity of those core products different opportunities, i.e. derivative suites, things of this nature, restaking, looping, stuff like this, that is much more appealing to a crypto native audience. So I think as we come closer to launching the platform over the next several months, very much looking forward to seeing the world's response from the existing positive feedback we've gotten as we're beginning right now demos and onboarding with the traditional trading market for uranium and commodities.
And pardon me, but did you already say which network you're using?
So the initial token will be an SPL token launched on Solana. The reason for this is institutions, again, don't want to interface in the traditional commodities trading world with liquidity pools, slippage, gas, any of this stuff. They want trades to settle fast and cheaply. And Solana, frankly, I think as a underlying technology is perfect for the application of some of these institutional products, despite the credit Ethereum usually gets over the years as being sort of the RWA core chain or main chain most will deploy on. So yeah, for the basic technological reasons, Solana is a pretty natural fit for us on a product that we think will be, like most commodities when they become financialized, start trading substantially more volume much faster. For example, natural gas, it trades about 23 to 25 times the dollar volume cash settled versus physically settled. So to basically front run the examples you see from the financialization of other commodities, deploying Solana first makes a lot of sense.
Okay, one last thing before we go. Ripple just announced that it's dropping its cross-appeal against the SEC over its years-long battle with the regulator. That's after Ripple announced the SEC was dropping its portion of the case last week. This news is just coming out, so check out CNBC.com for the latest. We'll be back again tomorrow, and we'll see you then.